Welcome back to the program. Taking a look at the auctions for this week, and there are 890 in New South Wales. 760 of those auctions are in Sydney, over 1,000 in Victoria with 962 in Melbourne. There are 289 auctions in Queensland with 147 of those in Brisbane, 156 auctions in South Australia, 18 auctions in WA, 3 auctions in Tasmania and 56 auctions in the ACT. But let's take a look at the most viewed listings this week, and over in New South Wales we have 29 Rockley Way, Epping. It's a 3-bedroom double-storey house with open plan living, French doors, opening to a garden courtyard. The price guide for that one is $1.65 million. In Victoria, we have 95 Ella Grove, Chelsea, a 4-bedroom house in need of restoration, as you can see there, on almost 600 square metres. It's got an 18-metre frontage and an indicative price guide of $800,000 to $850,000. Another top-viewed auction for the week is 47 Wardle Street, Ashgrove in Queensland, a 3-bedroom house on a big block just 6 k's out of Brisbane's city centre. It's recently renovated with a plunge pool too. And in South Australia, 2 River Street, Martin, is a courtyard home on 300 squares with a well-maintained courtyard and 3 bedrooms. The price guide for that one is $800,000. And finally in WA, at 33 Redmond Street, Salter Point, a modern 3-bedroom house recently built. It's got a spacious living area you can see there. Beautiful backyard. The auction is this Saturday. And the top listing for the week is 5 Vickers Avenue, Hendon in South Australia. You can see there it's a 3-bedroom, 1-bathroom house on around 670 square metres. It has high ceilings, a light-filled family room, split system aircon. Outdoors it has a front veranda and an expansive backyard for entertaining with room for extending subject to council approval. Its location is nestled between the beach and the CBD, and the place is going to auction with no price guide. Well, home loans for July are up 3.9% on month, smashing expectations, while investor home loan value is also near the record high reached in January of 2022. For more on those numbers, I spoke with Anne Flaherty from REA Group.
Well, across the board, we've actually seen a pretty significant rise in the number of new loan commitments, but we've seen the strongest rise in investor activity. So there are around 35% more loans to investors in July of this year compared to the same time last year. First home buyers and subsequent home buyers, in contrast, are up around 21%.
Yeah, so first home buyers really struggling to compete.
That's right, and we're seeing this particularly in certain markets. So Perth and Adelaide really are the big two. In Perth, the number of new loan commitments to investors was up 73% year on year, while new loans to first home buyers were up just 8%. We see something similar in Adelaide. Investor loans up over 40%. First home buyers up 10%. So while we are seeing more first home buyer activity, unfortunately, we are not seeing them able to compete with this sudden surge we're seeing in investor activity in these states.
All right, what about home prices? Because according to your latest PropTrack home price index, there's been a fresh peak, obviously been hit. What's driven this?
Look, yes, we are continuing to see property prices rise across the country. Most markets did see a further rise in August. As I alluded to earlier, this really strong investor demand that we're seeing in certain markets is one of the key drivers of this price growth, particularly in Perth and Adelaide, which did see the strongest rises. In contrast, we're not really seeing that same trend in Melbourne. Melbourne was one of the only markets to actually see home prices move backwards over August. Prices are still sitting below their pandemic highs there. Again, we haven't seen that same comeback in investor activity in Melbourne, and that's one of the reasons why we haven't seen prices tick up there.
It's interesting because, you know, we've had a lot of comments, obviously, from the RBA when it comes, obviously, with the housing market. We're looking at that. But Michelle Bullock was discussing rates, saying too early to talk about rate cuts. What does this actually do to buyer activity when we're talking, you know, potentially no rate cuts and even talking potential hikes on the horizon?
Well, I think that hopefully we won't see another hike. But if we do see, interest rates hold where they are for quite some time, I mean, the best thing that we can do to sort of predict what's going to happen is to look at what has happened. So interest rates have been quite high for a number of years now, and we haven't really seen buyer demand drop off significantly. The reality, of course, is that people do need somewhere to live. And this big increase we've seen in investor activity is actually, I think, quite telling. I think people are looking at conditions in the rental market, for example, and seeing strong rent growth, low vacancy rates, and seeing a lot of opportunity there. And at the same time, in those markets where first home buyers can get in, we're seeing them, really competing with investors. Unfortunately, depending on where they're competing, first home buyers are struggling, but of course we are seeing a lot of activity.
Yeah, and obviously the RBA will be, reticent to want to talk rate cuts too early, too prematurely. But once we do start hearing of a rate cut on the horizon, does that translate quite quickly, do you think, to the property market, to people buying again?
Well, it certainly translates to more people looking. I think that when we see more confidence around where interest rates are sitting, the potential for interest rate cuts, we start to see buyer confidence come back. Interestingly, we have actually seen the effect of some lenders decreasing their fixed home loan rates to increase activity, and we're starting to see more activity, more people looking, more people searching. So we would anticipate that it's going to translate down the road into more sales activity.
And appreciate your time. Thank you so much for joining us on the program today.
Thanks for having me.